Good morning, everybody. Welcome to OptionPit.com. This is the Morning Vol Report. This is Ian Giovinazzi, Chief Operating Officer of said OptionPit.com, welcoming you to, I think it's Rally Wednesday. Our Professional Trader Summit. If you're an OptionPit client, you would be invited to our Trader Summit on July 28th to 30th. Mark and I are there. We will be going through basically discussing just all different ways to trade options, guest speakers, and fun in and around the Chicago area, the game, Option Block, podcast, some fun in Greektown, and a big steak dinner in Chicago. So it's a fun 3 days. I hope you all of you can attend. And with that, you know what? Same. I keep looking at this and I just headlines. Threat of carriers. A lot of just this kind of continued, let's just say continued geopolitical volatility that's not really adding up to a lot. Not quite sure what's going on with it all, but just it is, VIX is lower substantially. The European election is getting less and less interesting. However, as you recall, last year the same thing happened. This is the election here. Now here's Brexit in June. Remember, everything flew up, right? Came right back down again, and then we had that huge spike, and then everything came crashing down again. So we're kind of following the pattern, although we're making lower lows than we did the last time, but we didn't make near the highs. So everybody obviously could see that Britain is still functioning after exiting, and just you just don't know on what kind of how the market will take this, but I still feel this is probably a little bit of a rope-a-dope into the vote. But you know, we could see a 13 VIX. We got to the 13 handle pretty easily after being around 16, and all of that strange future pattern that we saw. You know, essentially they're just not letting this. They're not letting the futures really go. They're not letting them go a little higher. And what seems to be happening is the market is discounting the future volatility, I would just say, significantly. There's not much else to say besides there's so little expectation for vol in the future. Even at a 14 VIX now, I would think the NOVE would be a little higher, but 18, 19, there's almost no. It's a fairly flat curve still. So the market doesn't care as much. We have a slew of earnings coming out. A lot of the bank earnings were okay, you know. And I think as we price stuff, I want to look at iron condors in the indexes. I want to look at them in the banks. You still have, I mean, we have had implied volatility down here for months, and ultimately, if the European thing is nothing, I mean, this is where we have been, very low. So as an opportunity to sell vol, we still have, you know, I would say it's a mid-range type trade, something that is, I think, still hedgeable. But as far as post-earnings trades, we'll look at Goldman Sachs. I think the banks feel like they're kind of done now for a while. That sort of glory days, looking at 235, 240, whatever. The gains will be slower, but it also does look like they're going away. Morgan Stanley, the same way. Same type of stuff where, you know, I don't think we're getting back to the pre. You're not getting back to those levels, but I think maybe writing puts are looking for any kind of broken wing flies, things for credits like that will start to look better now with, I think, the bank stocks. It does not seem like we're getting some of the easy, I don't know, I guess sort of the easy gains in the market from quick taxation, healthcare. It actually feels like more government as usual. So without the Fed, the Fed's trying to sell their book. Even on top of that, you've had, if we look at TLT, you know, the Fed's trying to put bonds out on the market, and rates are going up. So, you know, stock prices are going up. I'm sorry, rates are going down. So maybe it's reflective of that. But bond prices, what is there a demand for more bonds at lower rates when there's going to be more coming? So it appears like we have significant vol here. So again, there's still I'll just call it strange currents. It's certainly not the sort of low vol fun we had, maybe January through early March. Just a few more things happening. The Fed's selling. They're trying to sell their portfolio. That will have, I don't know what it'll do, but all of a sudden, at least for right now, bond prices are staging a rally and yield rates are going down. So it'll be better for the Fed, considering most of their purchase were, if you look back at it, where were they? Right around here. They stopped buying them a year in the end of 2014 or something like that. So I don't know what that portends for them in general, but for now, volatility is dropping a little bit. Some of those highs we see are going away, and we're waiting for earnings. And bank earnings have been okay. I don't know if it's been enough to sort of justify the rally that we've had, but there's still a little bullishness in the air on that. I think we'll see. I think we trade a little flat and strange until Friday, a little up, a little down, and I wouldn't be surprised by a point or two swing in the VIX either way at this point. Today and tomorrow into the weekend. And with that is our vol report for today, and I will see many of you in our chat room this morning. All right, everybody, bye-bye.